Every single day, millions of hardworking Americans walk into a psychological trap. You wake up early, drink your coffee, commute to work, and trade your most valuable asset, your time, for a fixed paycheck. You are told that if you work hard enough, save 15% of your income, and leave it in a standard high-yield savings account or a traditional retirement fund, you will eventually reach financial freedom. But let's look at the cold, hard numbers. Inflation constantly erodes the purchasing power of your cash, while traditional banking systems use your deposits to generate massive returns for themselves, leaving you with pennies. The financial game is actively rigged against those who simply save. If your money isn't aggressively working for you while you sleep, you will work until the day you die. It's time to break the cycle.
To understand how to escape this loop, we must examine the reality of modern wealth building. The old rules of money are completely dead. Decades ago, a simple bank account could yield enough interest to keep up with the cost of living. Today, leaving your money sitting idle is a guaranteed way to lose wealth. Wall Street insiders know this secret, and they rely on the fact that the average investor remains frozen in fear or completely misinformed. They want you to believe that investing is an incredibly complex, dangerous matrix reserved only for elite hedge fund managers with advanced economic degrees. But the truth is much simpler and far more liberating. You don't need an army of financial advisors or $1 million starting balance to build sustainable wealth.
What you actually need is a systematic, automated approach that completely removes human emotion from the equation. Imagine a strategy so quiet, so passive, that it requires absolutely zero daily maintenance, yet consistently transforms ordinary income into a self-replicating financial engine. This is what we call the silent compounder strategy. It is the exact method utilized by stealth wealth individuals who build multi-million-dollar portfolios without ever checking stock market tickers or stressing over daily market volatility. In this documentary, we are going to pull back the curtain on this exact blueprint. We will break down the precise mechanics of how to transform a modest $10,000 starting point into an automated $1.2 million empire. Let's look at the first major obstacle: the psychological illusion of safety. Most people believe that keeping cash in a traditional bank account is the safest move they can make. It feels secure because the numbers on your screen don't fluctuate. But this is a visual trap. Every single day, the real value of that cash is shrinking as the cost of housing, healthcare, and basic commodities climbs higher. Your savings account is essentially a leaking bucket. To build genuine wealth, you must shift your mindset entirely. You must stop viewing money as a tool for consumer purchasing and start viewing every single dollar as a dedicated financial soldier whose only job is to go out into the market and capture more dollars for your ecosystem. Meet Alex. He represents the modern American professional, ambitious, disciplined, but deeply frustrated by the lack of financial progress, despite working 50 hours a week. Alex looked at his bank account and realized that at his current savings rate, retirement was a distant, unstable dream. The cost of a comfortable retirement has dramatically jumped, and traditional models like the standard 401k are no longer enough to guarantee absolute freedom. Alex knew he needed a radical shift. He stopped listening to mainstream financial media panic and started analyzing how true wealth actually scales. He discovered that the secret doesn't lie in picking the next volatile breakout stock, but in owning a broad, unshakable slice of global economic productivity. This realization was his turning point. Alex decided to completely automate his financial ecosystem. Instead of manually trying to time the market or guessing which sectors would outperform, he established a direct pipeline from his primary income straight into low-cost, broad market index funds. This process is known as dollar-cost averaging, but when combined with automated dividend reinvestment, it becomes an unstoppable financial force. By setting up this system, Alex eliminated his own emotional biases,
When the market went down, his automated system bought more shares at a discount. When the market went up, his existing portfolio surged in value. He effectively turned market volatility into his greatest long-term advantage. Let's break down the precise mathematics behind this system. When you invest in a broad market index tracking the top 500 American corporations, you are backing the compound ingenuity of the entire modern economy. Historically, this index has delivered an average annual return of approximately 10% over long horizons. If you let your returns compound without touching them, something extraordinary happens. In the early stages, the growth feels incredibly slow, almost invisible. You might feel discouraged looking at your balance after the first year, but wealth creation is a game of patience and exponential curves. The real magic happens in the background, out of sight, while you live your life.
The concept of compounding interest is often called the eighth wonder of the world for a reason. Imagine your portfolio as a small snowball at the top of a mountain. When you first push it, the progress is minimal, but as it rolls down, it collects more snow. Eventually, the size of the snowball grows so immense that the amount of snow it gathers in a single rotation exceeds everything it collected in the first mile. In financial terms, this means that after a certain threshold, your portfolio will generate more money in a single month through market returns than you contribute from your entire salary over a whole year. That is the exact moment you achieve true financial escape velocity. To accelerate this process, you must master the art of optimization. This means identifying and eliminating the hidden wealth killers that quietly drain the average investor's accounts. The biggest culprits are high-fee, actively managed funds and unnecessary consumer liabilities. Many traditional financial advisors charge a 1 or 2% management fee. While that sounds small, over a 30-year investment horizon, those fees can swallow up to 40% of your total potential retirement wealth. By bypassing these middlemen and utilizing low-cost index platforms with expense ratios close to zero, you keep the vast majority of your compounding gains entirely in your own pocket. Now, let's talk about structuring the actual wealth machine. A truly automated system consists of 3 distinct pillars. The first pillar is the core engine, a highly diversified index fund that captures the total stock market. This ensures that your portfolio is completely insulated from the collapse of any single company. The second pillar is the automated dividend reinvestment program, or DRIP. Instead of receiving dividends as cash payouts, your system instantly uses those funds to purchase additional fractional shares, compounding your holdings automatically. The third pillar is the consistent capital pipeline, a fixed monthly contribution that occurs automatically on payday before you ever have a chance to spend the money. As Alex watched his automated system scale, his relationship with work and life began to change profoundly. He was no longer working out of desperation or fear of the next economic downturn. His portfolio had crossed a critical threshold, often referred to as the crossover point. This is the exact mathematical milestone where your investments generate enough passive return to cover your baseline living expenses. Once you cross this line, work becomes entirely optional. You no longer trade your precious hours for survival. Instead, you trade them only for purpose, creativity, and genuine fulfillment. The psychological weight of financial anxiety completely lifts off your shoulders. Many people ask, what happens during a severe market recession? This is where the silent compounder strategy truly shines compared to aggressive trading tactics. During a market downturn, regular investors panic and sell their assets at the absolute bottom, locking in massive losses. But the automated index investor views a recession as a massive store-wide sale. Because your pipeline is fully automated, your capital buys significantly more shares when prices drop. When the economy eventually recovers, as it always has historically, your portfolio rebounds with massive upward leverage because you accumulated a vast amount of cheap assets during the downturn. Let's project the long-term reality of this blueprint.
If you start with a baseline of $10,000 and consistently commit to an automated contribution strategy, the numbers are undeniable. Over 15 to 20 years, compounding returns transition from a linear line into a steep vertical arc. Your portfolio crosses 100,000, then 500,000, and eventually surges past the $1.2 million mark. At this stage, a safe 4% annual withdrawal rate provides you with $48,000 a year in pure passive income without ever touching your principal balance. Your wealth becomes completely perpetual, capable of supporting you and your family indefinitely.
This is the ultimate evolution of financial freedom. It is not about driving exotic cars or living an excessively lavish lifestyle. It is about reclaiming absolute sovereignty over your time. It means having the power to choose exactly how you spend your mornings, who you work with, and what projects you dedicate your energy to. The true measure of wealth is not the size of your balance sheet, but the number of days you can live completely on your own terms, without a boss or a corporate structure dictating your reality. By building a silent compounding machine, you construct an unshakable fortress around your life.
The path to this financial reality is completely open to anyone watching right now. It does not require luck, inheritance, or perfect economic conditions. It simply requires the discipline to set up the system, the patience to let it run, and the ultimate resolve to leave it alone while it compounds. The greatest financial mistake you can make is waiting for the perfect time to start. The best time to build your machine was 10 years ago. The second best time is right now. Take control of your financial destiny. Automate your pipeline and let time do the heavy lifting. Your future self is relying entirely on the decisions you make today.
If you feel ready to break free from routine and start building a system, drop a like on this video. That's my signal that we're on the same wavelength and ready to create something meaningful together. And of course, subscribe so you don't miss the next stage of our financial breakthrough.